Hello friends, this time we'll be starting with a new session and this would be regarding WD Gann's Master Commodities Course. Now we'll be taking you across through various important details which will make you think why WD Gann had specially talked about his rules in a specific way and why he traded those. Of course, the time factor is very important. We understand that, which he has tried to cover in his book, maybe again in a tricky way. See, certain rules are not being given by Gann. Certain rules are not being given by Gann, but once you are able to find out on the chart, you understand certain levels which are much more important. Let's say, for example, this was the low, then there was a high which was being made, and after this high, there was a sudden drop in the market. Now, after this high, if this is coming to a low, whether you should be able to trade this in the upward direction or maybe probably just going in the downward direction, this can be again be known. This is not a rule which is being given by Gann, but if you are able to interpret what has been given in the book, probably you understand why this point is important and why it would be turning back from here. This would be able to know once you are able to go through the books, try to understand and interpret in the way which W. Gann has specially talked to us about. So it would be much more easier because then you'll be able to know. Because see, if this is a high, probably we can say that okay, this was a double top. But after this high, if the market is going up and when the market is coming down, why this has especially come down to this level? And how would we know that if it is crossing this level and going down, we should be not going down rather than going up? Because this is going with the trend. But if you see for the rules, probably this is just closing below that. So how would we be able to understand that from here we should be actually going for a top and not going for a downward direction? Same way, if this top has been broken and if it is coming down, why should we actually be going up rather than as per the rules? If this high is been broken and the price is coming below that, probably why we should be going in an upward direction rather than going in a downward direction. So these are some unwritten rules which are been well explained by Gann in his trading style, in the book which is there, in the course which is there, and we need to just interpret those things in a proper way. So that's why just following the rules is important, but also the unwritten rules which have been given by him, which we are only being able to understand if we know and interpret in the way which W. Gann has been trying to say us. So some important points that we need to know about this course is first and most important. If we go through this book, what we understand is, first of all, see the course that he has given over here, especially, he has written this somewhere around in 1954, 1955, right? Now, this was around his 76th birthday, and 1955 is when W. Gann did expire. Now, he has left almost 52 years of his experience, his wisdom into this last course and given us to us. Of course, there are other books also which he has just written before this, which are again very important because it was like he wanted to give his relevant experience to people, which probably people were not able to understand through the tunnel through the air properly, or maybe what he wanted to give back to the society. He has tried to give back through other books, but here we'll try to see more of the details and maybe probably we'll try to think why W. Gann said about these things in a particular way and why we should be looking at those things. Think about it because there are some unsaid rules which he had given to us, which we need to follow and look at, maybe probably going through the charts or maybe the interpretations which have been given through his book. So let's try to go through them. As I told you, first of all, this is the overall things which have been given. There would be specific rules which would be given in every book which we need to follow. We'll go through one by one. Of course, we'll try to go through the grains one, especially soybean, corn, which is one of my favorites to go through because the charts are really interesting. Let's start with them. We'll try to not cover all the things in details, but some of them which we think are really important. There will be a series of webinars that we'll be having similar to what we had in the past, but we'll try to think more about that in terms of the charts, what he has given. So let's go through that. So this is the first chapter speculation, a profitable profession, a course of instruction on grains. So we'll specifically try to see about grains, both his famous May soybean, where he has been taking trades almost a year in advance. Not only that, we'll also try to go through corn also, because that is an interesting chart which I really love. So what I'll do is probably I'll have two books together. One is where we will be studying the theory part, and second, simultaneously we'll also have the charts, so that we can go through more of in details, try to understand and interpret what charts do meant to him and what he wanted to say through those parts. So stay tuned. Now, you can probably go through the theory part. We'll first of all try to jump across through the rules which have been given. The rules are very important. Let's first of all try to focus on that, and then cover the things more of in details. So here we come to the book. Page number is 8. Probably there is a slight difference between the page numbers which have been given over here, or probably we can consider this as page number 9 also. Here in the book it is given as 8, so we'll consider this. So he talks about rules for trading in commodities. As this zoom it across, this is the first rule, which says buy at new high prices or old top levels when they cross that. Now, this is one of his best rules because we are going with the trend. We'll try to see that in details. First of all, we'll go through the rule. Rule 2 is buy when prices advance above old low price level. So whenever there is a low and then after that the prices starts moving up, probably you can start buying. This is what the rule says. Rule 3, sell when prices decline below old top levels or high prices. It's like when you cross that price, go above that, probably you can buy. And similarly, sell when prices decline below old top levels or high prices. So whenever there is a high which is there, and when the price is coming down, probably if that top is broken and it starts moving down, we can probably sell or go in the downward direction. Rule 4 is sell at new low price levels. So same as rule number 1 that we have, if you have a new high, probably you should buy over there. Same applies for downward side, that is rule 4, sell at new low price levels. As a general rule, it is safer to wait until prices advance at least 2 cent above high levels, and still more important to wait until they close above these levels before buying. And at the same time, it is safer to wait until price declines half a cent below old levels, and still safer to wait until they close below these old levels before making a trade. So safe traders can always buy when there is a closing of the day below that previous low, then probably you can sell, or probably we can sell with a stop loss of one half cent. Probably when it declines half cent below that, yes, probably you can sell. Fifth rule is about closing. This is very important. Closing prices. Wait to buy or sell until prices close above old highs or below old lows on the daily or weekly chart when markets are very active and moving fast. It is important to use the daily high and low chart and the closing price above highs or below lows. Prices may advance rapidly during the day, but when it comes to closing time, they may run off several cents or close below that the previous day. And at the same time, when there is a sharp decline, prices may go below the low of the previous day. But when they close near the high levels. Therefore, it is the closing price that is always important to keep up on the daily, weekly, or monthly high or low chart. The longer the time period in days, weeks, months, or years when prices exceed old highs or break old lows, the greater the importance of the chance in trend and the move up or down. Remember the general rule: when prices advance to a new high level, they generally react back to the old tops, which is a safe place to buy. And when they decline below old lows, as a rule, they rally back to the old lows, which is a safe place to sell. Always, of course, protect with stop loss order. Now, stop loss is specifically given in capitals. So, this is the most important thing. If you are a trader or an investor, any person who is investing into the stock market or commodities or forex, or you say Bitcoin or any other thing which is there on trade, you should have the most important tool with you is the stop loss. Very, very important. If you are able to put up a stop loss, you are able to trade mechanically. Booking your trades is also a part or maybe form of stop loss, because you are trying to close your trade. Stop loss is nothing but closing your trades, which is very, very important. Let's go to the next rule. Next rule is rule number 6. It comes on page number 9. Stop loss orders. Your capital and your profits must be protected at all times with stop loss orders, which must be placed when you make the trade and not later. So it is very important. It is very well said over here. What has been said, I'll repeat once again for you. Your capital and your profits must be protected at all times with stop loss. Again, in capital orders, that is stop loss orders, which must be placed when you make the trade and not later. So the most important rule over here, if you are new to trading, the most important rule that you need to follow is rule number 6. That is, whenever you take a trade, immediately you need to put down a stop loss. Even if you don't know anything about trading, the most important rule that you need to follow is rule number 6. That is, after you take a trade, the first and most important thing is to put down a stop loss. Very important. How to put down the stop loss, that is also been given in the next rule. Rule 7, amount of capital required. It is very important to know exactly how much of your capital that you can risk on any one trade and never lose all your capital. When you make a trade, you should never risk more than 10% of the capital you have to trade with. And if you have one or two losses, reduce your units of trading. Very, very important, especially for the new traders. Now, this rule is also applicable for the traders who have been trading for a longer time frame, or maybe for a longer period, not longer time frame, but for a longer period. This is also very important for them, but especially for new traders, don't put all your eggs into one basket. For trading in Ray and soybeans, you should have at least $1,500. For trading in 5,000 bushels, suppose you risk 3 cent a bushel on a trade, you would have to lose 10 consecutive times to wipe out your capital. You could hardly lose in this way. Just guessing and by following the rules, it is impossible to lose all your capital. Now, the most important thing over here is following the rules. Most of the people who are there into trading don't follow this rule. I have also made losses when I didn't follow the rule. So, the most important thing is, see, if you follow the rules, even if you don't know about the time factor, forget about that. If you just follow the rules, that is more than enough. Of course, when you start making profits, you can think about the time factor, but first and most important thing is, if you know the rules, if you follow the rules, you would be a profitable trader. You could hardly lose it this way, just guessing, and by following the rules it is impossible to lose all of your capital. For trading in soybeans, especially at high levels, you should have at least $3,000. capital for each 5,000 bushels that you trade in, because it is often necessary to risk as much as 5 cents a bushel on soybeans. Right? So he's talking about, first of all, minimum capital is 1,500. For that, you should have a stop loss of 3 cent per bushel. For one bushel, it should be 3 cent of stop loss, and you can trade in 5,000 bushels accordingly. And if you are having a capital of 3,000, you can trade in 5,000 bushels with a stop loss of 5 cents. So for this capital, this is your stop loss per bushel, and this is the quantity that you should be having. I mean, like, this is for professional traders, not for all the traders. A trader should generally start with smaller quantities before he goes for bigger quantities. If you are very thorough professional altogether, you should always start with smaller quantities and then gradually go for bigger quantities. But the profits are much greater than anything you can trade in. Should you wish to trade in job lots of 1,000 bushels or 2,000 bushels, you of course can start on a capital of $500 and limit losses not more than 3 cent on any trade. And by following the rules, in many cases, your risk will not be more than 1 cent a bushel. The same rules apply to wheat, corn, and lard. So he initially talks about soybeans and rye, and then he says that okay, you can have the same rules for wheat, corn, and lard. Oats move in a narrow range and require about half as much capital as rye or wheat to trade. We come to the next rule. This is my favorite rule. Almost 50% of my trading is based on this rule. So this is very important, at least for me. And this also comes at number 8, which is very important. This rule is for both buying and selling. When prices decline 50% of the highest selling level, you can buy with a stop loss order of 3 cent below the low prices. Next strongest buying point is 50% between the extreme low and the extreme. Now he follows this with an example. This is the 50% rule that he has specially talked about. In other books, he specifically talks about this rule being one of the golden rules, and you can make a huge bumper profits or a fortune just by following this rule. So the example is, for example, Meray, the highest price it ever sold was 286 and a half. 50% of this is 143 and a half, and when this level is broken by 3 cent, it is in a very weak position. The lowest level Ray ever sold was 30 cent per bushel. 50% of this 286 and a half and 30 and a half is 158 and one quarter. The highest price that cash Ray ever sold was $3.35. One half of this is 167 and a half, and we have given an example of what happens when May, Ray, and other options decline below 167 and a half, 158 and a quarter, and 143 and a half. Now these numbers again are very important. Forget about being half of that, because it talks about the range. Now the range over here is 286 and a half and 3 cents. So of this range, this is the 50%. So similarly, we should always go for the range. We should not just calculate any value. Let's say, for example, 286. Half of that is to be considered as a ratio of this highest level and the lowest level. So whatever comes at to the 50% level, we should consider that, which is again very important. Selling levels, when prices advance above being far below the 50% point and reach it for the first time, it is a selling level or place to sell short. Protected with a stop loss order of not more than 3 cent above the 50% level. So whatever is the 50% level, above that you need to have a 3 cent stop loss. Example, suppose that May advances to 143 and a half. Now it is moving from bottom towards upside. That is what is meant by advances. The first time it reaches this price, if the indication on the daily chart shows it is making top, it is a short sell. So that what it means is the closing is below this price. So this is a short sale with a stop at 146 and a half. So he has just given how much of stop loss you need to have over here. That comes to around 3 cents. 143 and a half to 146 and a half. That comes to 3 cents. The next point is 158 and a quarter, which is 50% of the range between 30 cent and 286 and a half. So both the points he has included over here. This is 184 and a quarter. When May Ray advances to this point, you would watch for resistance and sell short with a stop loss order of 161 and a half. So again, the stop loss has been mentioned over here from 158 and a quarter to 161 and a half. After this point, the next selling level is 167 and a half or 50% of 335. Next, the range between 30 cents and 335 and a half, 50% of this is 182 and a half. So we have considered both 335, half of that exactly, and between 30 cents and 335, which comes to 182 and a half, which would be the strongest resistance and the most important selling level protected with stop loss order at 185 and a half. So again, a stop loss of 3 cent, which has been given over here. So 3 points above this, that is 3 cent, you can have a stop loss and trade accordingly. But the closings are again very important. When you start trading, be sure that you know all of the rules and that you follow them, as be sure that you place a stop loss order. Again, he's talking about very important thing, that is your stop loss orders. Now, why stop losses are very important? Because this is a part of risk management. Risk management is the first and most important thing that should be followed as a trader. So always remember, if you are a trader, the first thing that you should do after taking a trade is put down a stop loss. Very, very important. Now, these are the 8 rules which have firstly been given over here. We'll go further. Where to place stop loss orders? You must place stop loss orders below the lows of swings and not just below the low of the daily chart. Stops must be above old tops or below old bottoms or a weekly or monthly chart. Stop loss order placed below closing prices on the daily or weekly chart are much safer and less likely to be caught because you are moving your stops according to the trend. Stop placed above closing prices on the daily or weekly chart are caught a small number of times than if you place them below a daily bottom or a daily top. The swings or reversals in a market are the prices to place stop loss order one way or the other. It is of great importance to know where to place a stop loss order properly. Grains selling below $1 a bushel. A stop loss order is, as a rule, safe and caught less of the time when you place it 1 cent below the bottom and especially 1 cent under closing prices or 1 cent above closing prices. Now, again, the importance is given of closing price, which is again very important. When prices are moving from $1 to $2 per bushel, the stop should be at least 2 cent above highs or 2 cent below lows or 2 cent above closing prices or 2 cent below closing prices. Fine. So again, something which he talks about is in terms of where the highs and lows are there and also the closing prices. So probably if required, you can read this again so that you understand that properly. Very important to know where exactly your stop losses should be placed, because then probably if your stop losses are hit, of course they will get hit again and again, no doubt. If you know how to place your stop losses properly, probably things will be much more easier for you and you can trade accordingly. Prices at $2 to $3 per bushel. At this range of prices, stop should be at least 3 cent under the lows or above the highs. Prices $3 to $4 per bushel. At this range of high levels, fluctuations are fast and wide, and stops to be safe must be placed farther away at least 4 cent or 5 cent per bushel above highs or under lows. It makes no difference where your stop losses are placed as long as it is safe and not caught until the time is right and when there is a definite change of trend. At the end of high prices from 3.5 to 4 per bushel, which seldom occurs, stops can be placed 1 cent or 2 cent below the daily closing price, or at 1 cent to 2 cent above the daily closing prices. I talked about the daily closing prices and your stop losses can be above that. At extreme high prices, you must depend on the daily high and low chart to give you the high indication of a change in trend, which later will be confirmed by the weekly high and low chart of price move. Right? So probably we need to understand much more important words. Let's say, for example, what exactly is been meant by extreme high? What exactly are fluctuations? So these are some of the terms. Now, as we go on the chart further, we'll understand why these points are being considered maybe as reversal points. Again, understanding why this point is important, how to trace down if we'll be able to go further, and how much high we can go on with the chart. Because if you are able to find out this kind of trends where it will be going on the upward side, it will be much more easier. Once you know that one trend is being completed, how would the market again be coming back and to what important levels? Because this level is not coming to this point, but maybe just lower than that. And after that, the most complex thing is whether the trend would be going in upward direction or maybe coming down from there. So knowing about these things is very critical. This can be found out through the rules which have been given. And I'm quite satisfied with the rules because then you are able to understand how we should be able to know about the trend. See, certain rules are not being given by Gann. Certain rules are not being given by Gann, but once you are able to find out on the chart, you understand certain levels which are much more important. Let's say, for example, this was the low, then there was a high which was being made, and after this high, there was a sudden drop in the market. Now, after this high, if this is coming to a low, whether you should be able to trade this in the upward direction or maybe probably just going in the downward direction, this can be again be known. This is not a rule which is being given by Kant, but if you are able to interpret what has been given in the book, probably you understand why this point is important and why it would be turning back from here. This would be able to know once you are able to go through the books, try to understand and interpret in the way which WD Gann has specifically talked to us about. So it would be much more easier because then you'll be able to know. Because see, if this is a high, probably we can say that okay, this was a double top. But after this high, if the market is going up and when the market is coming down, why this has especially come down to this level? And how would we know that if it is crossing this level and going down, we should be not going down rather than going up? Because this is going with the trend. But if you see for the rules, probably this is just closing below that. So how would we be able to understand that from here we should be actually going for a top and not going for a downward direction? Same way, if this top has been broken and if it is coming down, why should we actually be going up rather than as per the rules? If this high is been broken and the price is coming below that, probably why we should be going in an upward direction rather than going in a downward direction. So these are some unwritten rules which are been well explained by Gann in his trading style, in the book which is there, in the course which is there, and we need to just interpret those things in a proper way. So that's why just following the rules is important, but also the unwritten rules which have been given by him, which we are only being able to understand if we know and interpret in the way which WD Gann has been trying to say us. So let's continue this further so that we can know further about this part.